All right, y'all, back to work. Boy, pretty darn good day today. Hope you guys made some money out there. I got some good news for us tomorrow. We have three ranges on the tick charts, the lower time frame right now. And I'll tell you, combine those three ranges with the higher time frame, the hourly chart directional filter, and boy, we have some beautiful bear traps setting up for tomorrow morning. In fact, I have three types of bear traps on my radar for Wednesday. I want to make sure we cover the entire roadmap, the entire game plan tonight, because I want to make sure you have a roadmap, a game plan to make some money tomorrow on these bear traps as well. So charts are ready. Enough of the intro. As always, thanks for tuning in and watching our videos. Let's dive in right now and get ready for what should be another fantastic day tomorrow morning. The S&P SPY ready to go tonight. Nasdaq triple Qs are always ready. I have two clues on these charts that are telling me where I think the money is made tomorrow. The first clue is right here on the higher time frame, the hourly chart. I like to use the hourly time frame as an overall directional clue. And if you recall from last night's video, we spent pretty much the entire month of July going higher, finished the month in a trading range. We then saw that big, strong breakout going lower on the 1st of August, the deadline for the tariffs. Right now, the sellers are trying to hold the underbelly of that range right now, breakout, pullback, and the bears are trying to run this thing back down to take out that low before we resume the overall bullish trend up overall. But that's not all we see right now. We can also see too, the buyers have their own range that pop up into a range we saw this morning. Now remind me again, folks, what do ranges do? They love to rotate. So buyers are trying to, you might call this a slingshot reversal up into that range back overhead. Our first big clue right now, sellers are trying to run this thing lower, but we know right now we're not a bear market overall, we're a bull market overall, and we're looking for those buyers to slingshot right back up into that range overhead. That's one really big clue, and you'll see something similar later on in the video tonight, the Nasdaq as well. We don't have any major news tomorrow, be aware, so we'll dive right in now to our tick charts, because remember, we don't trade off the hourly chart. We don't trade off time charts altogether. We trade off tick charts. Tick charts make entry timing a whole lot easier. And by the way, that is a 7,000 tick chart, upper left-hand corner. And in case you're tuning in for the first time right now, welcome, welcome. That is the 21 EMA. It's the only indicator we need to make consistent, repeatable profits. I mentioned earlier, there are three ranges on this chart right now. And really, that's the most important clue we have here right now. First range is that range we saw to finish up the week last week. Now remind me again, what do ranges do? They love to break out and they love to pull back. That breakout pullback zone though is a great place for a bear trap right now. Second range is the range we saw pretty much overnight in the pre-market this morning. Now remind me, what happens after ranges break out? You take the breakout leg, that's your measuring leg, it creates a measured move. That level is a great spot for a bear trap. What else do we about ranges? Ranges also like to break out, pull back off the underbelly of that area. We'll keep our eyes on that key level overhead at 63.57. Those are our 2 out of 3 ranges. The final one is the one right in the middle. Now, what do ranges do? They love to rotate the move down into that trading range, the amount above, the amount below, and it's very easy to see right now as we rotate back and forth here right now. I would love to get some bear traps down below that trading range. And remember, because we're an overall bull market on the hourly time frame, we know that if we were to get this rotation going higher, there's more likely now for a breakout, right? Because we're overall bullish on the higher time frame. Now that breakout going higher, remember, we do have some overhead resistance up overhead. That could be a bull trap up there. I want to talk about this one technique I like to use that will tell us if we can buy up here for the breakout going higher or if we should sell it up there for a bull trap. We'll talk about that dynamic a bit later on this video. Let's start first on my favorite trades here for tomorrow are certainly going to be a bear trap off of that low. And when I say bear traps come in a couple different variations. My favorite bear trap, by the way, I would love to get that measured move taken out, love to get that pendulum swing completed, love to get down around that 6305, 6303 area, that whole area down there. I would love to run this thing lower, wait for the pullback to that 21 EMA, because you guys know me, right? I'm not going to pick a bottom on this. It may keep going lower here. I don't know how far it will go. I have you'll notice, two breakout pullback zones. That level could also be a key level. That could also be a breakout pullback zone there below that as well. But again, I would love to get this thing going lower, wait for the pullback off that 21 EMA. And as those bears come in and chase after this, I'm going to try to use their stops to fuel this reversal, what you might call a slingshot reversal, back to where? Back to the other side of that trading range, the amount below, the amount above. Now remember, as this market tries to rotate now, where does it want to go? It wants to rotate, right? So now as it rotates, we then look to add to our position. And to do that, we look for a shallow pullback, a higher high in price, and a move right below that low. We teach this entry pattern in our free video classes. We call this a bear trap and an add-on. Again, run this thing lower into key areas of support. Horrible spot to be a seller. Use a bear trap, 2 tries, buy right into those stop losses, and then add to my winner as it finishes off that rotation going higher. And again, a bit later on in this video, we'll talk about as we go higher, because I have one simple technique we'll use to know whether or not we want to buy it or if we want to sell it as it goes higher here. But here's one more important question though. What if we don't get that bear trap down there? You know, in all reality, I wouldn't be surprised at all. It's summertime markets right now, right? I wouldn't be surprised at all if we saw a really sharp move down into that deeper breakout pullback zone there. We may not get that bear trap down there. It just may whoop and run right back up again. The hard part though is timing that entry. Because again, I'm not going to blindly buy down there. What I'll do is I'm going to look for what we call a V bottom pattern in our trade room. V bottom patterns, when they V bottom off that low, all I'm going to do is 2 things. 1, I'm going to mark up these prior swings. And then 2, I'm going to draw a trend line off the highs, bring it down around that low. That finds a channel. And then repeat after me. First test is the best test. Now, I can't go over all the entry tactics in this video. I teach it in a lot more detail in our free video classes, but any of the entry patterns you guys are learning in the free video course right now, it could be a bear trap, like I'm showing you here. Oftentimes, this gets below that moving average. Bears get caught short off that moving average. For another version of a bear trap, a pullback combination. Again, any of the entry tactics you guys are learning inside that free video course can be applied. Remember, first test is always the best test. Now that reminds me for a second. Why don't we pause for 2 seconds right now? Because I know most folks watching right now, you guys know these patterns. You know why we love this first test is the best test off this channel. But if you're watching for the first time right now, this might be a brand new language, a brand new strategy. Don't you worry though, I teach this entire roadmap, the entire system in my free trading course. In fact, I have a ton of examples of all of these entry patterns outlined in a lot more detail in that free video class. Guys, the markets are way too good right now not to be making consistent profits. So I'll put a little link up top here for you, upper right-hand corner, hit that link to pop up right there. And take that free trading course, because the strategy I teach in that video series will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly though, let's face it, we make our money by timing good entries. So in that free video class, I'm going to teach you my 4 favorite entry setups so you can time better entries, make a lot more consistent profits each day. Guys, if you're still missing the best entries each day, if you've lost your confidence in your current trading strategy, What are you waiting for? Hit that link that popped up there. Watch that free video course. Everyone loves all the trade examples I include in that short video series. The best part is it's completely free for you. Also be aware too, guys, I'm going to put all the important links you need to learn the roadmap, join our trade room, follow along during the day. All the important links you'll need are linked up below the video, description of the video. Start first on the free video course. You're going to love that. Most folks start making money all on their own, all from that free video class. So start there first. And also don't forget too, I post a ton of videos and charts and mindset stuff on Twitter, or X as they call it these days. If you're on the X platform during the day, give me a follow. You'll love that feed. Again, all the details you'll need to follow along to the day. I'll link the description of the YouTube video. All right, so now you know where to go if you're watching for the first time right now, because I do look at things a bit differently here on this YouTube channel. Okay, so I mentioned earlier, this range, right? That range right in the middle, that range right there wants to rotate back and forth. And I love the idea of some bear traps. And again, because we're overall bullish on the higher time from the hourly chart, we know that rotation off that low has a lot more potential to break out going higher. I want to talk about going higher here in a moment. Before I do that though, please don't forget, right? Don't forget, we oftentimes will see a run going lower. We'll get that bear trap off that low, but instead of getting that rip going higher here, every once in a while what happens is we'll get a small winning trade, like today, for example, right? We had that big run down, that one, that two. It didn't really rip as much as we wanted to, right? A little winner, right? You know, we take whatever the market gives us here. But a lot of times though, we'll get that 1-to-1 first target, move that stop up to our point of entry. Like I teach this stuff, by the way, inside that free video course. But guys, sometimes it doesn't squeeze, right? Sometimes what happens is we'll get that run down, we'll get that bear trap down here, we'll get a winning trade out of it. But every once in a while, they hold the underbelly of that range because, of course, ranges like to break out, pull back, and we see another leg going lower. Now, remember, as I mentioned earlier, the breakout leg of a trading range can be used as a measuring leg. So knowing that, once we know how big the breakout leg is, then we know how big the measuring leg is. Now we know where our money zone is down here. The money zone, by the way, is anywhere between that recent low and, again, that breakout leg for our measured move. So that becomes our money zone. This now is way too low to be selling. Horrible spot to be selling. Again, it's a breakout pullback zone off that larger range we saw from late last week. And so now, because that is a bad spot to be selling, it's a great spot for, you guessed it, another type of bear trap. Now, it's really the same basic idea here. I'm not going to pick a bottom on this. I'm not going to waste my time with divergence or indicators on this. All I'm going to do is wait for the pullback off that 21 EMA, let those bears commit. Right? We're not going to blindly buy into it like today, right? You can't blindly buy into it because it may keep going lower. But once it does begin to pull back and we start seeing bears chip away at it, then we can use that signal to buy back up again. And again, some of them don't work as well, like today, right? It was a bit slow. It was late in the morning. Not every one of these can be a big monster winner, right? We take whatever the market gives us. We take thousands of trades. We basically let the law of large numbers play out over time. So let those bears get trapped in here, squeeze those stops running higher. And remember, this range up here, right? It wants to rotate, right? It wants to rotate back up again. So while this trade performs, don't just kick your feet back on the desk and watch the money pile up. Go put more of that capital back to work for you. Look for this add-on. Guys, once I learned how to add to my winners, it completely transformed my trading career. Bear trap, add-on. And again, when I say add-on, you want that separation off the moving average. A lot of examples of those inside that free video course. Okay, so we call these retest trades, right? It runs down. It's a bear trap up. Again, we take that 1-to-1 first target. It's a winning trade, but it then retests that low. Love the retest trades, especially if we're down inside that money zone down there. Okay, that's my game plan now if we go lower. Now let's talk about if we go higher here, right? If we wind up rotating now back higher off that trading range. To do that though, let's go grab the Nasdaq right now. The Nasdaq is very similar to the S&P in the sense that we pretty much spent the entire month of July going higher. Look at how big, look at that huge move we saw higher here, late June, early July. I would say this is a healthy correction, right? Because the higher we go, you can't keep going up forever, right? This, in my eyes, is a very healthy correction in my eyes. What I see though is a bull move up into that range from last week. We saw that very strong breakout going lower. The bears are trying to hold the underbelly of that range right now. And again, the bears are trying to retest that low before we inevitably resume the overall bullish trend and back to all-time highs. This is something that repeats over and over and over again. If you've watched these YouTube videos with us over the years, this pattern repeats over and over again every few weeks. They make these big runs up, this big strong correction down. They try to retest this low. Now again, right? Don't count these buyers out just yet. This is not a bear market. It's still a bull market overall. It's not a bear market until we take out that low and keep going, right? We're definitely not a bear market right now. What we know right now is there's a new range right there. Now remember, what do ranges do? Ranges are magnets. Ranges love to rotate. We're now down to key levels of support below this range, and the buyers are trying to slingshot now back up into that big range, back up overhead. That is what our higher time frame tells us. Now again, we're not going to trade off the higher time frame. We'll trade off the tick charts. Before we dive into tick charts though, if you're enjoying this video tonight, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people these days. I know kids are home from school still. Almost time for back to school, so a busy time of the year right now. I appreciate you guys carving out some time with us every evening here on these videos. So as always, thank you guys so much for the likes, subscribes, all the ongoing support, all the love I get in the comment section below. And I promise I'm done begging for likes and subs here right now. Let's now dive into our tick charts here. That is a 4,000 tick chart you'll see there, upper left-hand corner, and of course that same 21 EMA. I see 3 ranges on these charts right now. That's a range right there. And like we saw on the S&P chart, right? That breakout, that pull back. Beautiful spot right now for a bear trap. And again, as I almost forgot to mention the S&P here, that level right there, that's also a breakout pullback. So if we saw this thing continue to accelerate going lower, that would also be another breakout pullback. So again, this one similar there on the S&P. Then again, that range from overnight. What do we know about ranges? We know that the breakout leg is the measuring leg. We know that puts us right in that breakout pullback zone. We also know too that as we break out, we know we've got some resistance up overhead from that breakout pullback zone up overhead. And then arguably the most important range right now is this range right here, right? That range right there. They run down and they rotate back and forth. We've already completed that pendulum swing, right? The S&P is not. The Nasdaq definitely has. So we are right in that spot now where we are looking for that rotation back up again. Now, I mentioned earlier on the S&P that as we go lower here, I love the idea of trapping in these bears and squeezing those stops for that run back higher. I gave us 3 different variations of those, right? The bear trap, the V bottom, the retest trade. Remember the money zone, right? The measured move money zone going lower. So keep it in mind there on the Nasdaq. But now, what if we end up rotating going higher here? What if we don't get a bear trap down there? Well, I'm glad you asked. There's a few patterns I look for in situations like this. Now, I mentioned this a little bit earlier on this video. When we rotate off this low, where does the market want to go? It'll want to make a pendulum swing. And as it rotates off the low, we look for one really important clue, and that uses the 21 EMA. We call separation. If I can pop up here and start seeing separation above that moving average. Separation equals strength. And what I mean by that is on the pullback, right? Most of the time, it'll pull back a bit below that moving average, right? That's no separation. But if I see this thing now really kind of rotate off that low, if I start seeing us now separate off that moving average, that means a very shallow pullback, a higher high in price. I can now go in and begin to jump in during that rotation. The goal will be to get this entry below that low before we get up into that breakout pullback zone, before we take out that pendulum swing, right? Very, very important. Then at that point now, we're watching to see if we can keep up that separation. If I can keep separating off that moving average, separation will tell me I do not want to sell the underbelly of that range. I will now shift my focus to looking for what is basically another breakout pullback. Now there's two types of breakout pullbacks I'm gonna look for in this scenario. One of them, I'm gonna take all of these prior highs and basically flip them now into an area of support, right? So all those levels of resistance will now become an area of support. And I now look for what is basically a breakout pullback. Now my vision of a breakout pullback is, let's wait for that strong shot down. Oftentimes, by the way, these are two-legged pullbacks. Not always, but oftentimes they are. The goal though is I want to pull back off that high. Remember, the goal here is separation, right? Separation off the moving average is the key factor right now that will tell us that this is probably not the time to be selling. And once those bears do try to short that breakout pullback zone, I'm looking for a breakout pullback of my own off what was resistance can be now used as support. Trap those bears in, bears once, bears twice. I like to use two tries. That way I know I have lots of stops. I can juice on that way going higher, right? If you're caught short, if you're a bear trying to short this thing back down again and you're caught, you're stopped out, you buy your way out, right? Those stops are buy orders, okay? That's why bear traps, that's why I like to run stops so much in our trade room, right? So I'm gonna run stops there. I'm looking for basically a breakout pullback, right? It's a breakout pullback off of that trading range. Now remind me again, how do breakouts work? The size of the breakout leg, right? Yes, that becomes my target on my measured move, and that's the final target we'll use here going higher. I don't know yet. I don't know how big that first leg will be, but once I do know what the breakout leg is, and I know how deep the pullback is, I can then go out and readjust now, and I can make sure we know where our final target will be up overhead. Love breakout pullbacks. Now, one more variation of that breakout pullback. These are pretty common in summertime markets that we're seeing right now in the month of August. Every once in a while, we're going to rotate off of that low, and as it rotates off that low, we're going to start seeing this thing begin to grind away from that moving average. Now, this will be a bit frustrating because we're not going to get a way to get in on this, right? Unless you're buying high on this one, right? So we're not going to get that entry I mentioned earlier. We'll get separation, it'll begin to grind, but it won't pull back for us. Now, if you're anything like me, that voice in your head is going to tell you to chase after this. I never like to chase after anything. Your patience is almost always rewarded in trading. And what we'll do now is we're going to mark a trend line off the high. We're going to find that channel off of that low. And let me always say, find your channel and then look left. And the goal really is, I want to get in underneath a prior swing, ideally, not always, but ideally get underneath a prior swing. And again, any of the entry patterns you guys are learning in the free video series can be applied off of that low. It could be a bear trap, a technical bear trap below that low. It could be a 2-try bear trap, 1, 2, like I teach in more detail in the free video class. And again, it could be a pullback combination. Remember, all of this relies on that separation off that moving average. It rotates off the low, it separates, it begins to grind, then we attack. Buying that first test off that low, that 2-try bear trap, that pullback combination. And you know. Now, here's one thing about these pop and grind moves. The pop and grind moves, the size of the pop leg, that initial leg, right? It'll pop up and begin grinding. The pop leg is the measuring leg. Okay, a little bit different there on this one, right? The pop leg up, right? The pop leg is the measuring leg. It'll pop up, start grinding. We find our new channel. We look left, find our prior swings. We get in below that prior swing with our bear trap. And again, the pop leg is the measuring leg. That will now tell us where to leave that final target overhead. And obviously those recent highs at 04, similar levels we saw earlier on the S&P. All right, guys, final variation, okay? Final variation. What if we went and popped up into another trading range up here? What would happen? That range would want to what? It would want to rotate, right? Now remember, ranges love to break out pullback. So if we're lucky tomorrow, this is the easiest one to make money with. If it pops up and goes into a trading range, then all we do is we use the previous range, the previous range for a breakout pullback. We use the most recent range for, you guessed it, a pendulum swing. We use the 21 EMA for, you got it, the bear trap, bears once, bears twice. And we use handcuffs if we have to resist temptation to cut that trade early, right? Whether it takes duct tape or handcuffs or leave your office if you have to, but let that final target run all the way up to that pendulum swing up overhead. So if we're lucky tomorrow, we'll get a nice big range up there and we'll use that range because again, ranges love to rotate. There's a lot of examples of that trade right there inside that free video course. If you like making money, grab that link below the video description and you'll enjoy that free video class. A lot of examples of that in the free video course. All right, guys, that's my game plan now for tomorrow. What do you think? Am I crazy? Let me know in the comment section below. Always love hearing your feedback in the comments below, but that's my game plan for tomorrow. Now, speaking of tomorrow, the easiest place to start making reliable, consistent profits is to learn and trade along with us every morning at the opening bell. As always, I'll put all the important links you need to learn the roadmap, the description of the video. Start first on that free video course. You're going to love all the trade examples I share in that short video series. Then come join us in the members trade room, 8 o'clock Eastern time, and we'll do it together. In the meantime, guys, be well out there, be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.